Hi there, welcome to the weekly general update for the 3rd and 4th of December. And last weekend I talked about expecting to see a relief rally in the week that's just gone. And we did see the reversal start on Monday, and that was, I guess, due to the fact that it was oversold and it was due for a bounce. But there was a bit of encouraging news out of Europe, which didn't hurt things. But the major stimulus last week was the coordinated action by the 6 central banks, which hasn't solved the major problem, and that is that most European banks are broke and some European governments are completely broke. Hasn't solved that problem one little bit, but what it has done is injected liquidity into the banking system to basically unfreeze it. We got back virtually to the situation that we were in September of 2008, when the interbank lending market had basically frozen up and nothing was happening. So that liquidity risk was what was the major overhang on the market, and that's now been removed. And I would expect that liquidity is not going to be an issue for probably at least a few months. But please bear in mind that the bigger picture, and that is the sovereign debt issue and the insolvency issue of most of Europe's banks, still remains. So things can come back to revisit in the future. However, we did get a substantial rally last week, and in the process absolutely smashed all the resistance levels that you would have normally expected. And as a consequence, I think that kind of clears the way now for some probably pretty positive trading into the end of the year. So let's get on and have a look at some of the information and charts. So this is the normal important information on general advice that I've been through many times before. Now, just a summary of the action for the week. The S&P finished 7.4% higher on the week, so that was a very strong week. And as I said, just smashed through all the resistance levels that you could have drawn. I'm expecting that we'll get a few days down to correct the short-term overbought and then rally up into Christmas, because there are a lot of fund managers out there that will be looking to improve their bonuses by punting this market harder. The other dynamic, of course, too, is that fund managers can't afford to get left behind. If the market is moving higher, there is nothing worse than investors not making money when they can see all their neighbours making money. So that's an absolute given for fund managers. So I think you're going to see a very strong rally into the end of the year. Although we still do have the summit in Europe on the 9th of December, so I guess that always has the possibility to throw a spanner in the works, but at the moment it's looking pretty positive. Now the ASX did slightly better, closed 7.6% higher on the week, and I've identified some possible trades for this week as well. Gold was also positive, closed up $65 on the week, and it's still resolving a big picture triangle before breaking higher. And I'll have a look at the gold chart when I get to that part of it. Now silver was also just under 5% higher on the week, so it did pretty well. And the Aussie dollar was back up sharply from around 97 back up to $1.02. And it's looking like the US dollar's running out of steam, which means the Aussie dollar will probably push higher, and that will definitely take local stocks with it. Let's just have a quick look at the S&P. The big picture, we're still in a bear market that's going to last for the next 2 to 3 years, so that hasn't changed. The next 3 to 6 months, we got the relief rally that I suggested last weekend. From here, we could go either way, and I'm going to trace out a couple of possible paths on the S&P. And it really does depend a lot about political decisions, and that's why it's still pretty hard to be confident beyond the end of this year. Looking at December, a Christmas rally is now highly probable, and in the next week I would expect a few days down. We had an extraordinary surge. The S&P from bottom to peak went up 102 points in a week, which is just massive. That's 1,000 points on the Dow. So I would expect to see a few days down and then start to move higher. So let's hop over now and have a look at the charts. And this is the S&P index. So I'll just pan back, and you can see that we've got an upper resistance line here that is sloping down fairly sharply. We've also got an inclined support line that's forming as well. Now there are two scenarios that I can see unfolding here. One is that, and this is not allowing for obviously the very short-term fluctuations, but just over the next couple of months, we could move higher. In fact, I think we will into the end of the year. And as long as we don't go beyond this resistance level, which at the moment is about 1305, then I would expect to see a bit of a correction early in the new year and perhaps back down towards this support line, which is at about 1220. And as you saw from last week, 1220 is also an absolutely critical support and resistance line that you can trace back to 1998. And it's had literally more than a dozen touch points during that period of time. So 1220 is critical. So in scenario one, I'm suggesting that we get a move up into Christmas, a move down to correct that, and then a significant start of a significant rally within the overall bear market. So that's scenario one. Scenario two is that we move higher in the same way towards Christmas, maybe form a double top here around about the 1290 area. Don't quite make it to the resistance line, indicating a bit of weakness in the market, and then a failure of that bottom support line, in which case we would then go straight into a new market decline. So that's scenario two. At the moment, I really don't know which one it's going to be. As I said, it will depend a great deal on political decisions out of Europe over the next few months. So we'll just have to wait and see how that pans out. But I think at least for the next few weeks, which is our trading focus, then we've probably got some reasonable opportunities. Let's just have a look at the Aussie index. And you can see we had a very strong rebound. Every day last week, the Aussie market finished on its highs or very, very close to its highs. So that's enormously positive. And we'll just look at the Small Ordinaries Index as well. And the Small Ordinaries, you can see, also very positive. Every day finished virtually on its highs, and some better volumes kicking in as well. There's just one other thing that I want to show on the S&P index. I'll just tighten in here. Now, there were several levels that I was looking at. 1220 was obviously a critical level, and I didn't think the market would get through there. But I also had other levels, other Fibonacci levels, which I've marked here with these three little lines at roughly 1200, 1210, and about 1225. Now, it got to the first one at 1200, but then completely blew away everything else. And just such amazing strength that it's very, very rare that that we don't get a bit more upside. You don't tend to see rallies of that momentum only last for 3 days. So that's why I'm now so relatively positive about the next few weeks. So a couple of days down, maybe back down somewhere between 1225 and 1240, somewhere in that area there, and then a push higher. Now let's have a look at gold and silver, because I think that's where there's going to be a major opportunity certainly in gold stocks. Now this is gold on a weekly chart in US dollars. You can see after the massive run that we had and the huge deviation away from the moving average and the long-term support line that had been in place, so the price really got way above this trend line, then we're always going to get quite a few months of consolidation. And you can see now that we've got this triangle having formed here now. And I think we're probably within a few weeks of resolution of it. And then I think once we see a bust out of this triangle, confirmed by a close above 1800, then we'll see a sharp move in gold, and we could even see $2,000 an ounce by the end of the year. So very, very positive for gold and for gold stocks. What I'm hoping is that we'll get a little bit of a short-term pullback in gold, maybe to just under 1700, and then that'll allow us to add to our positions. And finally, we've got silver. And silver, I was looking for $27 to $30 as an entry. Still possible, but starting to look a little bit more positive with silver now. And just before I finish, I'll also cover copper. And you can see copper certainly rebounded pretty strongly last week from around 320 to 360. So that's all pretty positive as well. So that's it for this week. Expect a short-term pullback and then the continuation of rally, and the written daily alerts carry a number of stocks that we're going to be looking to get into over the next couple of days. So that's it for this weekend's update. We'll see you next weekend. Cheers.